Good morning and welcome to Equity Story Trade Watch, 8th of February. It's a Wednesday, so again, I'm here with Claude. Welcome, Claude.
G'day.
How are you going?
Good.
We are going to be basically all going to be talking about fundamentals mostly, because Dave's not around, so we can do whatever we want. I like it. And we're not going to feel guilty about it. So let's start off. Before I do that, Equity Story disclaimer in front of you. And of course, everything we talk about today is going to be based on the company's fundamentals and technicals only. And we've got a few announcements to get through, Claude. And our theme of the day, which we'll talk about after the announcements, is looking at the first half FY23 reporting and which companies we think are going to report well or surprise maybe on the upside, right? Where we should probably be looking at. You've got a couple, I've got one, so we'll talk about that in a second. Now, right before I start, just last night's movements, we've had NASDAQ and the Dow up, which is nice. But, after yesterday's interest rate rise, I think there's maybe the thought that the interest rates are maybe going to last a little bit longer than everyone expected with the inflation. Saying that, we'll see what happens. Of course, we can't predict these sort of things. At least the markets hasn't panic too much, and it seems okay today, especially when last night's in America, the markets actually were okay after Powell said that maybe it's going to be a little bit longer than people expected. So from that point, I'm happy. All right, let's get on to some announcements this morning. So I'm going to start with the one I'm going to actually change the screen first of all, and I'll show you the first one I've got on there. So I'm going to new share and put that on like that. So the first company I've got on my list here is TMS. So Little Tenants Minerals, who come up with some drilling results. And I tell you what, those drilling results are very, 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 very good. So nice and thick, 50, 60 meters odd, about 6% copper, 6 grams per ton of gold. It looks very, very, very good. Now, the only problem I've got with this, it's still early, of course, small market cap, but it's only got 2 million in cash. Now, that 2 million cash they've got could be gone in the next quarter. So they need to raise fairly quickly. So that's why I'm thinking past this announcement and past this jump, they could go in a trading hold and start raising cash because they spent about 1.5 mil last quarter and they've only got 2 million left. They need to raise. Looking very good. Like I said, I don't mind this copper play because it's a pretty interesting high grade discovery at Bluebird around Tennant Creek. So I'm looking this with interest. It's a pretty interesting story. All right, next one, BTI. Let's look at that one. And this is Bailador. So they invest into, predominantly unlisted tech stocks, and then sometimes they get listed and they still hold on to their shareholding, like they did with SiteMinder and another one of recent memory. They've done that the same. Not a bad result today. Look, it's starting to creep up again over the trend line. That's why I just wanted to talk about it, because it's one of those tech stocks that is interesting by nature because they're pretty good at investing, and some of the investments have done very, very well for them. So I'm always watching for potential trades in this. It's trading below its NTA, I believe, and it's starting to look good. So if this stays like this at the end of the week, this could be a trade. So we're going to be watching this. Like I said, a good result today. Let's see what else they can come up with. Next one is SUN. And they've released a pretty strong report, and they reiterated their guidance. So overall, I think if you're in this for a dividend, well done to you. It should pay you pretty good dividends, and not a bad story to boot. It might not go up too hard too high, but at least, the very least, I think it's going to go sideways quite nicely for you, which you can just pick up those 5, 6, 7% dividend yields, whatever that bottom line will give you out of that. So again, liking that, and it's looking pretty good as a story, and we've got this in our dividend portfolio as well. Last one, and maybe Claude, you can help me with this one, is Duratec, who came up with more good news with more contract wins.
Yeah, that's right, Peter. So this is one that I was just looking back in my notes. I first identified this in October 2021 as I was just looking for basically profitable companies that might benefit from the sort of rotation from growth to value. And, unfortunately, I didn't really have faith in it to hold it through that, what Dave would say is a bad chart there, probably bought it a bit too early.
Yeah.
Anyway, got back on once things started improving, the chart improved. I didn't get back on because of the chart. I got back in because the actual results in August were really strong. And we talked about it on this exact show and a bunch of times. And now, look, we're just seeing a multiple expansion in this company. Why are we seeing a multiple expansion? Number of reasons. First of all, this is a profitable company with growing profits, so it's got a good story. Second of all, it's not insanely priced. Even now, it's on 22 times earnings, so it's not like your 122 times earnings stuff. Third of all, you got some decent thematics there with mining being a key driver, but also they get money for maintaining and building up defense bases and stuff like that, maintaining in particular. So that's a reasonable tailwind as well at the moment with the way the winds world are going. Unfortunately, now I would argue that everybody knows about all the good things about Duratec now. This isn't the sleepy little low liquidity thing. You can see they've got their, what I would call a pump announcement today. Why are they putting this out? Is there some kind of, I have no idea why they're putting it out. Like, have they got 65-cent options from memory? I can't remember. Either way, look, this is all caps thing. I don't get why they put it out. A few project awards, 40 million. Basically they've got a good order. It seems like a real OTT announcement for whatever it is they're announcing there. So that's a little bit of a warning sign. I'm also seeing now is there was a fund that went long this a while ago, and they put out what was then therefore an influential little piece on why they thought it was really great. Now what we're seeing people on social media like cherry picking the positives out of that report, not putting any of the risks, just giving, in my opinion, a very one-sided, inappropriate kind of, everyone's talking about this now in the small cap investors. They can't help but notice the momentum, the earnings momentum, the share price momentum. And this is how we overshoot, basically, is my opinion. So I'm not positive Duratec anymore. I think that it's gotten too expensive. I still own it. I'm still holding it for now. I'll probably hold into these results maybe. And I'm like, I don't know what the share price will do, and I'll let that guide me. But right now it's definitely out of the buy zone, Peter, and into the hold zone on a fundamental basis.
No, fair enough. I mean, you've got to look at the fundamentals, of course, and if it's getting too expensive, you really don't want to chase something on that regards. On the technical side of things, if you look at it, if you're in this, you can probably still just tighten up your stop loss. Maybe if you look at, the weekly is quite high above the trend line. So maybe you'd be looking something below 65, 64, and you probably get out if it gets below that. I think below 70 is just too tight. Other than that, I think
when we talked about this, like David, we'd sort of started, I'd bought around 50 cents and, I thought that was just that was just the top end of what I wanted to pay. I felt like I'd kind of missed the sweet opportunity then anyway.
Yeah, look, if you were buying that, you're still making a profit, good profit, right? So at the end of the day, like I said, for traders out there, you can tighten stop loss. You can maybe look at thinking of a profit, if it's getting closer to that report. But it's still looking at not a bad chart. So I would not be definitely panicking out, but I'll be just watching the chart pretty carefully to make sure.
Well, I think that they're going to have positive, they're going to have positive commentary after the first half results, because they've they've made a $48 million announcement on the 20th of December. They've made a $100 million announcement on the 23rd of January, and then they've made another $43 million for announcement today. I think that they're going to say, hey, we've got heaps of revenue coming down, things are looking strong. So that's one reason to hold into results. One reason not to hold into results is last year, it was after the first half results that I sold some shares that I sold out completely because I thought that they were weak. Now that was sort of more lockdown affected. So that was probably the reason there, but it was a bit of a weak half last year, I would actually say, that's just going to make the comparable so much better. So that's another reason to hold on to results. However, the big negative is CFO resignation there, which we saw recently. So perhaps that means that the logical thing to do, it's anyone's guess whether you should hold on to results or not. But I think that I'll be looking to get out at the latest, or I don't know, I probably will get out after the results, because I don't think this thing goes to the sky. I think that, it has a limit to how high the share price can go.
Right. Especially with we're trading at 22 for a engineering company or services company like this. It's just too expensive. I mean, we don't see them normally trading at these sort of levels.
Exactly. Look, the best case scenario is that, we're expecting growth essentially. So they're expecting a EBITDA growth of some 50% in the full year. However, this will be weighted to the second half because it includes an 8-month contribution from an acquired Wilson's pipe fabrication business. So the first half will be probably like less than half it's definitely going to be, I'd say it's going to be less than half the forecast EBITDA for FY 2023. But there's a good reason for that. And what's more, it's got a weak comparable in the year before. So that should mean that it looks okay after results. That's the speculation. Best case scenario, the market loves it. And then that's when you get a good exit opportunity. All
right. Let's move on to the next part of our show. That is thought of the week, Claude. Now, of course, the premise was to find a company that should report well, or maybe even surprise on the upside. So do you want me to start first, or do you want to go first with the companies that we want to talk about?
Well, I've got two, so happy to go first.
All right, go for it.
So first one, similar kind of theme from Duratec. And of course, you know the one well, so please jump in with your own opinion here. But look, it's a bit of a layup. First order thinking here. We've already got the quarterly updates for Q1 and Q2 from Matter Group. They're both really good. They essentially give us a lot of information about, what the half yearly is going to look like. So I think it's safe to say that, I think what we're going to get with the half yearly is we're going to get some, good growth numbers, which they've already essentially, given us a peek at. And we're going to, on top of that, probably get a conference call and, positive commentary around how things are going. And then also those numbers that are currently just announced in some, non-audited quarterlies. And we don't have the profit number. We just have the EBITDA, which was up 53% in Q2. We don't have the profit numbers yet, so it hasn't all flown through, but we have a fair bit of information to suggest that the numbers were probably pretty good. Now, is that already factored in? Well, it might be, but I have a feeling that there's at least a good chance that once they do a big hullabaloo around the actual results and report everything, and that filters through the data providers and all that sort of stuff, there might be a little bit of strength after those results anyway.
All right. Well, look, the company's, first of all, chart looks amazing, right? I mean, it's just powering along, 466. Momentum still absolutely there. Maybe it's getting stressed for me. The only issue I've got now, it has gone so hard, so fast, Claude, that maybe their valuation is getting stretched.
I think it's a similar story as Duratec here, to be quite frank. And so I would be potentially looking to take some profits after these results. Having said that, I think Matter's probably a better quality business than Duratec. And so it's also got it going in North America, whereas Duratec's just Australia. Yep. So I think there's probably a little bit more blue sky opportunity there for Matter Group than there is for Duratec. So that would make me more inclined just to hold on to what I have, which is also a pretty small holding.
Agree.
I have a very small holding because I didn't get my order filled at 380 or whatever it was before it. It literally half filled. Very annoying.
That's all right. I'm going to make it up for you. I've got a big holding in this.
Yeah, well, good. I'm glad one of us is winning out of it.
Anyway, I'm probably.
So yeah, realistically, I'm probably just going to hold on to my tiny little half holding of Matter Group, just because it makes the pain of watching both you, Peter, and also my very good friend who's a fund manager Matt Joss, his fund has been long Matter Group. In fact, he's been long it for quite some time now.
Yeah.
And I imagine they're doing well out of it. So seeing my friends all do well out of it has been killing me.
All right. We're not gonna harp on about it, all right? We're gonna keep it we'll not make you sad. But I'm sure there's other stocks that you are, you've got some and we don't, and we're gonna go, wow. All right,
Yeah.
Next one. So I like this one. Look, I definitely should report pretty well. I agree. All right, give me the next one. What have you got?
All right, the other one is one that not many people other than me really, I've never seen that many people talk about it. Tiny little microcap that I own called Allogio.
Yes.
And what these guys do is they do short stay accommodation renting, and there's a bunch of moving parts with this, so it's a bit of an acquisition story for a start, and so just be aware that that's like, it's not really necessarily an organic growth story, but I think it's small enough in the roll-up journey that it's still like, my rule with roll-ups is you want to get in early, you want to get out early, and I think it's still early enough with these guys. They're a pretty small company still, about $200 million 200 million shares on issue rather, at a 22 cent share price, call it. So it might be $45 million market cap or something like that. In the last half yearly, they reported, let me just get this up so I have it quickly, but they're profitable, essentially. NPAT increased to 2 million in the last half year, and so at that, I think that there's every chance that it's going to have a fairly strong result. Not in the last half year, sorry, in the last full year. That was in HY 2022. But I think there's every chance that, this will be a strong segment, because this is, less impacted by lockdowns and stuff. Also, just, we've had a big holiday. People have still had saved up money. That's put prices up. We've heard airline prices being super high. Well, I'm pretty sure that this short stay accommodation has been going pretty well on pricing as well, from what we've been seeing. Our little hamlet where we have our beach house had nothing available over Christmas, New Year's. Usually you can, a month or two before, look and book a house, but no, like, there was nothing on all the websites. You just had to know your neighbor and be able to find, who had an empty house if you wanted to like accommodate friends. So tightest market there this summer. I reckon these guys will probably do pretty well in this half year result. And yeah, I own shares in them.
Look, I'm just going to give you a little bit more fuel to the fire. Is I live close to a property that they own here, and over the last 3 months, there's just basically no vacancy signs the whole way through. So I think that thematic for sure is true, where the pent-up demand has seen a lot of these properties being used, really. So they should, I agree with you, they probably should release some good results coming through. And the chart looks pretty good, I have to say. It's come back, it's had a pretty good move, then come back to the trend line. So maybe there's something to have a think about over the next couple of weeks before the report is out. So yeah, ones we don't really normally talk about. So thank you for that, Claude.
Yeah, just a bit of a moving target there. The Greens policy across a lot of council areas, including in Byron Bay, where they have a recently acquired business. The Greens policy there, I think, because it's just like a populist move, is very much against short stay accommodation. So in a lot of these regional areas, ironically, the exact Greens politicians have resisted releasing lands for development. Because they definitely don't want, high rise and stuff, because it's all very, no evil developers, keep them away. Like, that's the vibe a couple of years ago. Lo and behold, oh my gosh, there's a housing shortage in their areas now. People can't get long-term rentals because a lot of the houses are being bought by people who are just using them as holiday house and renting them out in short stay accommodation to get some cash out of that. So they don't want long-term renters in there. And so now the Greens in Byron Bay, and also, by the way, this has been mirrored in a number of other local areas. The populist message for them now to get the I have no problem with environmentalism, by the way. I love environmentalism and all of that. But, the Greens at a council level are totally ridiculous, because now the populist thing is that they don't want short stay accommodation because rents have gone up. but they haven't allowed development. So I don't know where they think the people are going to go. Because, you know, obviously if you live in Byron Bay or like tourist areas, there's more demand over time as the population grows. And as people can now work, some people work from home, they don't want to live in a big city, etc. So that's a bit of a risk for Elogio, because they basically want to limit the amount of days that people can do short-term accommodation. It's going to be an exact hit on Elogio, just completely be bad for them. They're fighting it with the politicians. Let's see what happens.
Okay. Let me move on to my story, and I've only got one today, and I'm looking at Lindsay. And the reason why is, first of all, good chart, of course. We talked about that. It's come back to the trend lines again, so that's why we'll probably want to have a look at it now. But Claude, they've actually haven't updated us for some time, right? The last one was in November, and they were pretty positive about, obviously, the full year results. But they also updated us at the AGM in November about the first quarter, which was going apparently very, very, very well. So they said the conditions suit them. Things are still looking strong. You know, the capacity on the rail is increasing. So for me, it looks like a story that potentially could really surprise on the upside. I'm hoping that they obviously do. And it's still very inexpensive. That's why I'm liking this. It's still trading at very, very nice numbers, where I'm happy to accumulate around these levels and see if I can, you know, have a good result, and maybe that's further bounce. As long as they've got that positive outlook moving forward, I think that's also going to be the key for a lot of these stories that we're going to be mentioning over the next few weeks. So, you know, Lindsay for me is in that category that we've seen CLX do quite well. You know, they've been upgrading for the last 3 months, but this one's sort of been almost flying under the radar. Even though the chart maybe says otherwise, because we haven't seen too many announcements from them. But I think the people that know probably know that this is going to be pretty good. And I know that I think SOL has got a nice stake in Lindsay as well. So for me, overall, I think this is going to be one of the probably picks for me for a good result. And hopefully that will reflect in a push up higher. So that's my sort of choice. We might come back and have another go at next week, Claude, see if we can maybe think of a couple of others in there, because I think that's a pretty good exercise in trying to get some really good stories where they're looking good on the chart, and maybe we can profit out of that as well when they do actually report quite well. Because I like the way you talk about these things, where you sort of refreshes your memory thinking, oh, okay, well, maybe I should look at this before the results, and if it's good, then I'm going to be a winner here. So I like it.
Exactly.
Thank you so much for that. Anyway, we'll call it a day. Thank you so much for joining me, and thanks everyone for listening. We'll see you again tomorrow.
Thanks, Peter. And yeah, I like the logic behind LAU as well. That's interesting one. I'm going to run the rule over that in the next few days.
Thank you very much. Cheers.
All right. See you, mate.
Bye.
Bye, everyone.